Hello, hello. Thank you for joining me today. My name is Danae Wolf, and I am a financial clarity coach and a profit strategist, which means that I help entrepreneurs like you increase your profits and decrease your stress simply by learning how money works in your business. I firmly believe that if you don't know what's going on in your bank account, you don't know what's going on in your business. So, my entire purpose on my tiny corner of the internet is to help you guys gain financial clarity through teaching financial literacy. So, I hope that these videos will help you gain more knowledge so that you can finally start taking control over the money in your business and stop allowing it to control you. And when you do that, great things can happen. Now, if you're here live with me, go ahead and leave a note in the comments. Say hi, I'd love to interact with you. And if you are watching this later over on the YouTube channel or on the Facebook group, go ahead and just write hashtag replay. Just being completely honest with you guys, any type of comments, the reason I ask for those is any type of comments just majorly helps the algorithm. And I believe so strongly in the right to free financial education. And I really just want to make sure we can help make that possible by sort of tricking the algorithms into spreading the videos more. The more you guys engage with this, the more that Facebook and YouTube will show it to other people. And I believe that this is very valuable information and it's free. So why wouldn't we want to share it and give access to all? So today's topic and what you're going to be learning in this video is how to read and analyze your profit and loss statement, also known as your income statement. So in this video today, I'm going to break down everything you need to know about the profit and loss statement so that you can walk away with a really firm grasp and understanding as to how the profit and loss works, what you can learn from the profit and loss, and why it is so important. Now, this video is actually part of a 3-part series that I am doing over the next 3 weeks about the 3 big financial reports. So those reports are a balance sheet, a cash flow report, and a profit and loss. So over the next couple of weeks, we are going to be breaking down all 3 of these reports, and we're starting with the profit and loss. Now, if you guys want to get access to everything in the series, go ahead and subscribe to my YouTube channel. You can search YouTube under Danae Wolf, Denai, and my last name is Wolf, like the animal, but with an E on the end. And that's how you guys will be able to keep up with this 3-part series. So let's dive into this profit and loss statement. First of all, let's honestly just start with the basics. What is a profit and loss? You guys have probably referred to or heard it referred to as a P&L, right? So a profit and loss statement is simply a summary of a business's revenue and expenses over a period of time. So it's really going to provide you a snapshot of what happened financially in your company over a certain set of dates. And you're able to control those dates. You can go into your settings in the report and you can pick the dates. So if you want to see how the business performed last week, you could set the dates for last week. Most commonly, people are going to be looking at their profit and loss reports weekly, monthly, quarterly, and annually, but you could legit log in and look at it for yesterday. So you can control the period of time that you look at this report. And I'm going to show you guys an image at the end of a real P&L. And well, when I say real, let me give you a disclaimer. I'm not going to share any fellow entrepreneurs' financials with you guys, but I have a QuickBooks Online demo account that is specifically used for these purposes. And I am going to show you guys and walk you through a real life P&L. But at the beginning of this training, I really just want to walk through the basics of it. So we've discussed how the P&L is going to give you a summary of your company's revenue and expenses over a certain period of time, and you can dictate the time. You can go into the settings of the report and choose the dates in which you want to look at this information. Now, The general formula that you need to know of the way in which the P&L works is this. We're going to have our total revenue minus our business expenses equals our profit, or in some unfortunate situations, equals our loss. So the profit and loss statement will show you your total revenue, your total expenses, and it's automatically going to deduct the expenses from the revenue. And at the bottom, it will tell you what your profit was or what your profit wasn't. And this is why the profit and loss report is so important. It tells the story of your company's profitability. This report is going to show you why you are profitable or why you are not profitable. And if you are in business, guys, you need to have this information, okay? If you are making decisions in your business and you're not basing it on the data, you're not making data-driven decisions in your business, chances are you're probably making the wrong decision. We need to, every single month, at minimum, I prefer you to do it weekly, but at minimum, every single month, we need to be reviewing these profit and loss statements in our companies so that we are able to see what was our total revenue, what were our total expenses, and what profit did that result in? Did I have a positive profit? Did I have a loss in which I made no profit? You have to know that. And then you are able to look at the information on that P&L and determine why. So let's say your business was profitable. Let's say last month you had a $10,000 profit. We want to know why. We don't just want to say, oh, great, I'm profitable. Yay. Do that. Have your little celebration. Cheers it up. Give a toast. Have a drink. But then go back and read the data. You need to see why you were profitable. What if you realize you had a bill that you forgot to pay and it was a rather large bill? And now you realize, oh, I wasn't actually that profitable. It was just that I forgot to pay my rent, right? So you want to look at the information and see, why did I end up with this profit? Did I have a client pay for 6 months in advance, right? Did I do a really great marketing campaign that resulted in an influx of revenue, right? You want to look at this information and see what it's telling you. Or let's say on the flip side, you actually realize that the profit and loss gave you a negative amount. So your company was not profitable. Again, why? Right? This is the beauty of this report. And I get so passionate when I talk about this because, guys, I don't want to go on a big tangent, but just to let you know, my life was changed by a profit and loss report. Okay. And I know that sounds dramatic, but it's legit. Okay. So I owned a quick service restaurant. It was a franchise, and I was bleeding money and had no idea why. And I did not have any type of bookkeeping system or process in place. So I had no idea what was going on financially. I simply knew that I never had money in the bank, and I didn't know why. And I went through the process of completing my bookkeeping. I had all of my profit and loss reports assembled, locked and loaded, and I sat down and read those bad boys. And guys, let me tell you, the answers jumped off the page at me. I immediately saw that I was spending too much money on my food costs and my payroll. I was way above industry standard. And I was able to go into those areas of my business and operationally make changes that lowered those costs. And boom, I was profitable. I didn't increase my revenue. I didn't go out there and hustling to try to get new customers. No, because guess what? Money won't fix your problem if the problem is you. So if I would have went out there and just started hustling to get more customers, I still would have been losing money because at the root, the cause of the problem was me. My operational foundation was a mess. I didn't know how to manage food inventory or how to manage my payroll schedule. So funneling in more customers would have just continued to result in a bigger loss for my business, right? More money, more problems, right? So we can't always just assume that if we have no money in the bank, it's because we need to get more revenue. No, you need to look at your profit and loss report. So I am going to go ahead and share my screen with you. And if you guys are listening to this recording on the podcast, please go ahead and head over to YouTube, search Denai Wolfe, DenaiWolfe, and you'll be able to also see the image of this. And what we'll do is put the link to the YouTube channel in the podcast description as well. So here is a sample P&L, all right? So this is Craig's Design and Landscaping Services, okay? This is this fictitious company that QuickBooks Online demo account has. So you can see how the P&L is broken up. The first section is our income. That is all of the business's revenue. That's all of your sales. The second section is cost of goods sold. This is very specific expenses that go toward you actually executing the delivery of your service or product. So let me give you guys some very specific examples. When I had my restaurants, my cost of goods sold were the food, because that's what I actually needed to serve my customers. So all of the food was a cost of goods sold. All of the paper products that I used to wrap up the food, put it in bags and get it out the door, that was also a cost of goods sold. So if you run a bookkeeping firm like I do, my cost of goods is all of the QuickBooks Online subscriptions I'm managing because for my clients, because that is how we execute the bookkeeping service, right? We need to have that software. And then my labor costs for the bookkeepers who work with me. They are a necessity in order for me to deliver my service, right? So that's really the question you want to ask yourself when determining what expense is a cost of goods. You want to say, is this a necessity in order for me to get this product or service out the door? So if I run Facebook ads, right, that's not going to be a cost of goods sold because that's not a necessity for me to deliver my service to my clients. But the bookkeeper who's doing the work for my clients, that is a necessity in order for me to fulfill that contractual obligation I have with my client. So that's going to be the second part. The next component is your expenses. These are your regular operational expenses. So all of the expenses that are not directly tied to the delivery of your product or service, they belong in your operational expenses. Then after that, you're given your net income. Net income, guys, is profit, okay? I get asked this question all the time. People say, oh, I pulled my profit and loss. I don't see the line item that says profit. It says net income. So I just wanted to clarify that because I know that that can be confusing. And I know when I started this entrepreneurial accounting journey, I was like, where the hell is the profit? So it's the net income that means profit. Now, you'll also notice that you see gross profit sitting right under our cost of goods sold. So here is how this all works. You've got your income, which is all the revenue generated. This is everything your customers have paid you. Then you have your cost of goods, which is everything you had to purchase in order for you to get your product or service to your clients, right? So it was a necessity. If somebody were to buy a shirt from you, your cost to get that shirt ordered, maybe embroidered, packaged up and out the door, that would all be your cost of goods. Once you take the revenue minus your cost of goods, you're left with a gross profit. Think about this like your paycheck back when you were an employee, right? We had our gross pay, and then they minused out our taxes, and we had our net pay. All right. That is why the very bottom line on the report says net income, because what you're going to have is your revenue, which is your income, minus your cost of goods sold, all of those expenses directly related to your product or service getting to your customer. And then you have your gross profit. This is the money that is left over for any business operational expenses. That gross profit is how you have to run your company. So if you sell something to a customer for $50 and it costs you $10 in supplies, you actually only now have $40, right? Because you had to give the client whatever they purchased from you, and it cost you $10 to give it to them. So you have $40 left. That means you must operate your company on $40, which means these expenses here cannot exceed $40, because that is all you have left, right? Your customer pays you, you send them the product or service they paid for, and the money that's left over is how you're going to run all of your operational expenses. So it's really great the way that all of this is laid out for you on here, because you might take a look at this and say, hey, my gross profit is really low. Well, that might mean that your cost of goods is extremely high, which means that either you need to work with different suppliers or maybe different service providers because the rates and what you're paying is too high, or it could mean that you have to raise your prices, right? Which is a question I get asked all the time. How much should I charge? Guys, the answers you need are hidden in this report. They're sitting in this profit and loss report, just begging you to read them. You can get all of that information right from here. So in this example, right, we can see that our profit was $1,551.21. That was the profit that this company had in this time period, right? And you can see this report was pulled from January 1st through April 13th. So that's the only profit that this company has had over those couple of months. And when we click into these, we're able to see what were those expenses. So you can see we had an advertising expense, an auto expense, equipment rental expense, insurance expense, right? Guys, this is everything you need to know about your business. It is telling you in its most simplistic form, okay, what this P&L is telling you. It's telling you where your money is coming from, right? Up here in the income section. And then in the expense section, it's telling you where your money is going. And then at the bottom, it tells you what that actually means for you as the business owner, right? It gives you the profit. And now you're able to dig through all of this information and get answers, okay? Figure out, why do you feel like you never have money in the bank, right? Or maybe figure out, I've had a really successful last couple of months. Why, right? Was it the income that went up? Was it the expenses that went down? Was it a beautiful combination of the two of those things, right? But at the end of the day, you're going to figure out everything you need to know about your business by looking at this profit and loss. It is a tremendous disservice to your company if you do not review your profit and loss. Now, the other thing I want to say is you can label the items on your profit and loss to be whatever names make sense to you. So when we were just looking at that example, you saw there were, an advertising expense. You could make that very micro by saying, here's an advertising expense, right? So we're going to have an advertising line, and underneath of it, we're going to say social media ads. Then we're going to say TV commercial ads, right? Then we're going to say magazine ads. You can break it down so that what you want it to say and the way you interpret information, right? The way you want to read it, you can do that. You can completely customize it. So instead of an expense saying payroll, you could get so micro to say, hey, this is Julie's payroll. If you feel that you want to look at your profit and loss and actually see employee names, right? Now, there's all kinds of best practices and tips, and we don't want your P&L to be, 200 pages long. So I don't recommend getting that micro. But the point is, you want to figure out what are the important categories that you want to gauge, right? If you are in the middle of a bunch of different marketing campaigns, I absolutely believe that those expenses should be very specifically written out as to what you spent on Instagram ads versus Facebook ads, because then you're able to go back to your leads and say, okay, did I have a more successful Facebook ads campaign or Instagram ads campaign? This is the type of knowledge you can get by reading this P&L report. Knowledge is power, guys. So let's do a quick recap, right? The profit and loss is your summary of your business's revenue and expenses over a period of time. You guys can go in and you can change those dates. The basic equation of the profit and loss is that total revenue minus expenses equals your profit or your loss, because it's very possible your business did not have a profit. And at the end of the day, the reason why this report is so important is because it tells the story of your company's profitability. As an entrepreneur, you want to know why you're profitable or why you're not. We always want to know why. Okay, a lot of times as an employee, depending on your company culture, so I don't want to make a blanket statement that all companies run like this, but a lot of times as an employee, we just blindly follow and do what we are told. We don't know why. We don't know the strategy behind. As an entrepreneur, it is your job and duty and responsibility to know why. There should be a strategic reason for every decision you make in your company. It all needs to come from the data. And a huge chunk of your data is sitting on that P&L report. Now, as I told you in the beginning of this video, there are 3 reports that you need to be diligently looking at as a business owner. This is just one of them. So tune in next week when we dive into the balance sheet. And the week after that, we'll dive into the cash flow report. And what you guys will see is how the 3 of them all interact with each other. And here's what I want you guys to know. If you want to make money, okay, you need to be financially literate. It is not a lack of money that is keeping you broke. It is a lack of financial education. And a huge component of financial education is knowing how to read and interpret financial statements. So I hope this part 1 of the series was helpful. If you guys have any questions at all, please do not hesitate. You can find me on Instagram at the Chic CFO, THECHIC CFO. Shoot me a DM. I promise I get back to all of my messages. I will see you guys next week when we learn all about the balance.